Well, that was the day so far. You're with us here on Closing Bell. I'm Prashant. With me, Reema here in the studios, and Nigel, as always, from the newsroom floor. Guys, hi. Last hour of the weekend. That's the right expression, Nigel. Absolutely.
I think that expression should be reserved for me this week. I'll give it to you probably after 2 weeks. This one belongs to me.
IT to metals, huh? Yeah. IT right at the beginning and metals a little later in the earnings calendar, but
it's much later actually, Prashant. Reema starts it, and when she's nice and easy, I'm the one that's struggling. So yeah.
So Reema opens it and you finish it, right? I mean, that's the earnings season. All right, so what do we have? The market is basically testing an important, not an important support, but basically the first support that we highlighted, which is nothing but the 38.2% retracement of the September high to low, which is 17,262. We are at 17,234, so actually it's not testing, it's broken it. But let's see, there is an hour to go and things may change, but that has definitely been tested. It'll be a good thing if it holds after such a euphoric kind of a start. If the market gives up more, you'd go you go into the weekend on a slightly weakish note as compared to how things were in the first half of the session. Global markets have also calmed down. Till the point Asia was trading, things were very jumpy. You look at Asian market closes, 2.5%. But I think what has happened is that US equity futures have also turned slightly south. They're, I checked 5 minutes back, down about 1/3% or so. And European markets are up between 0.5% to 1%. So that's like a more nominal kind of reaction. And I think when cash markets open in the US, any potential follow-through will be important to note because when we come back, I think that'll be what we'll come back to on Monday. Big 5% move from intraday lows, and a follow-through will most definitely put bulls here in the front seat, driving seat. Not that they're not, but I think will only add to the confidence that this was not just a one-day wonder last night and that there is more to go in terms of this short covering, short squeeze, whatever you want to call it. On Sunday, this Sunday, you got an important event out of China, the 20th Party Congress in China. We can talk more about that, but basically this is the most important political event in the Chinese calendar, at least in the last 5 years. Some are saying in the last 10 years. President Xi will perhaps get a third term, a status elevation. From a market standpoint, he'll make a speech, by the way, on Sunday. And from a market standpoint, the only thing what matters is if there's any change in terms of the zero COVID policy they've been following, and they pivot. Pivot has become a bit of a favorite word. But that's essentially what markets will watch out for. Reema, hi.
Hi, and that will have implications of the flows, right? India has garnered a disproportionate amount of the emerging market flows given its outperformance. Year to date, we've outperformed the Chinese markets by close to about 14 to 15%. So if, on Sunday, and, the speech which follows gives you a sense that, perhaps China is going to be focusing a lot more on growth and growth picks up over there, who knows if, the flows may reverse, right, given the valuation comfort that China offers vis-a-vis the Indian markets. But for our own markets, we've slipped from the top of the trading session. The Nifty slipped close to about 100 points from the top. And a lot of the IT names, they opened out with considerable strength. But from the day's high, we've seen most of these large cap stocks slip close to about 2 to 3% If you pull up the intraday chart now, or Wipro, TCS, you would see that from the day's high, a fall of close to about 2 to 3% Infosys is holding up in the green still and going strong with a 3.5% up move. But again, from the day's high, there has been an element of profit booking coming through in all these IT names. But next week is also going to be a big one in terms of earnings, and it's spread across various sectors. So next week, we've got ITC. That's, the IT stocks and how they've slipped from the day's high. Just to, give you a sense of the kind of profit booking that we've seen in many of the IT names. But talking about next week's big earnings, you've got Bajaj Finance, ITC, ACC, Asian Paints, Axis Bank, Reliance comes out with its earnings on Friday. That's the 21st post-market hours. And then on Saturday, you've got ICICI Bank. So the weekend which follows, the Monday which follows, is going to be very, very crucial. Let's quickly tell you who this week belongs to. Despite the profit booking seen in many of the IT names, IT stocks like HCL Tech and Infosys still go home with gains for the week. But Axis Bank is the biggest winner this week with a rally of close to about 6%. And on the losing side, deep cuts seen in Wipro, Wipro's down close to about 7.5%. There have been sharp EPS downgrades post this earnings. And considering the other three IT stocks did well, their numbers were resilient, Wipro stands out as a bit of a sore thumb this time. SBI Life, Divi's Laboratory, Asian Paints too, seeing pretty nasty cuts this time. Nigel?
Well, that's right, Rima. It's got very volatile in the last 1 hour or so. And as you said, the Nifty has taken a couple of knocks just in the last 45 minutes or so. Otherwise, it was a good trading session. The bulls would have been feeling quite good. The intraday dip twice got bought into. Once at around that 17,240 odd, we did see an intraday dip. But that low in the last 10 minutes or so, that was 17,012. From there, we saw a bit of a bounce. That as well as got sold into. So, you like the Nifty actually to at least end above the 17,200 odd. Remember, we have the 20-day MA at around 17,275. For bulk of the trading session, we were trading above that particular level. So, you'll want that level, the Nifty to get as close to that level as possible. On the option side, the call writers were taken to the cleaners earlier. Let's see how the final hour of trade shapes up. But the 17,000 call, the 17,100 call, on both those two, if you look at it, the open interest is down sharply, while the 17,300 put is seeing a fair bit of build-up. That's telling you there is some writing out there. And the premium out there is around 200 rupees. So that's giving you a sense at around the 17,050, 17,100 odd. The bulls will like to take a bit of a punt. The Nifty Bank as well, very, very important. Remember, it's trading above the 20 as well as the 50 DMA for bulk of the trading session. Close somewhere around this vicinity will be helpful to the bulls as well. But plenty to talk about before we get into that weekend that we've been waiting for. Let's run you through all the top stories that we're tracking for you and also what we have lined up on the show. Well, it's a good day of trade for the Indian markets. The key indices, well, they notch up gains of close to around 1.5%. All sectorial indices trade in the green, led by financials and IT. The mid-caps are relative underperformers in trade. We'll place a spotlight on some sectors today. How to play India's IT, agriculture and consumption theme. We'll take you through Old Bridge Capital's Kenneth Andrad's views and what he makes of these sectors. Federal Bank gains on the back of a solid showing in the second quarter, led by robust loan growth at 15-quarter highs and strong improvement in its asset quality. More details lined up. And finally, we'll take stock of the market and top sectors and stocks to remain invested in with our Alpha Manager of the Day, Harish Krishnan of Kotak AMC. All this and more in the next 60 minutes on Closing Bell.
Well, for now, how should you position yourself in the last hour of trade? Mitesh is joining us. But Mitesh, I'm just going to come to you. Just want to take note of the flash at the bottom of the screen. This is Max Financial. And look at what's happening. I think there is IRDA is levying a penalty of 1 crore on Max Life Insurance. And that's a 10% knock. Penalty on Max Life on making undue gains by way of transaction of shares. This is what is coming through. I think we have an IRDA order, which I can kind of try and go through and have Yash with us to tell us more. But 1 crore fine, unless, of course, there are more in terms of implications. We'll have to see. Okay, I think what we'll do is we'll just kind of read this out, but you're seeing the news and the market implication, but we'll have more on this shortly. Mitesh is with us. Mitesh, just what 200 points now on the screen. Is this the dip that you want to buy, or you wait a bit more? What's your sense?
So, Prashant, one, I think we have not been able to get past the 17,300 mark decisively. We didn't get an hourly closing about that. But I think this could be a dip, which one can explore to buy into. I would recommend a stop below 17,170. So you have about 49, 50 point kind of a risk from here. Take the stop loss 5 points lower and about 55 points. And I think there is still a chance that we might attempt the level of 17,300 tomorrow or on Monday. So would be a buyer over here. On the stock side as well, I have 2 buy calls. IGL is a buy. Keep a stop below levels of 376 here. Look for targets of 395. And the other one is Kotak Bank, which opened with a gap and then is slightly tapered off, operating the high of around 1860. But the structure is very positive. So keep a stop below levels of 1830, 1829 here and look for targets of around 1885.
Thank you very much, Mitesh, for that. Prakash Diwan is also joining in. Prakash, I'm going to throw this at you, and I apologize in advance, but any thoughts on the news which is breaking on Max Life? It's a penalty which is being imposed by the IRDAI, but the penalty amount is just 1 crore. So it's not significant at all, but we're not seeing the stock recover. It's still down close to about 8%. Let's pull up that intraday chart. Do you have any idea what this is, the background? The stock is down still close to about 8%.
Good afternoon, Rima. So, I think essentially it's not the quantum of the monetary financial impact on this penalty. It could probably also contain some sort of strictures in terms of restrictions on business in certain portfolios, particularly the equity-oriented portfolios, and which means that if they are not able to grow, at the same pace that they would otherwise do, if there was a window that they would not be allowed to do certain new additions to the portfolio, that is definitely a bummer. So I think it possibly is much more than just that 1 crore that's troubling the market. We'll of course have to read through I haven't had a chance to go through the order as yet, but that's my guess. And remember always that any blink by any of the players in this space is an advantage to the others, and it mostly is loss of market share in a fairly expensive way. So you're staring at one of the best quarters coming ahead in terms of Jan, Feb, March, and that could kind of be a little bit of an inhibition for the market to take it. But well, of course, if there is nothing else beyond this 1 crore, then you'll probably see a belated reaction in terms of the losses being recovered.
Okay, all right, got that. For the time being, it appears the stock has seen a good recovery from the day's low. We'll try to get in Yash. Our team is checking out. For the time being, I think the she is taking note of the quantum, at least, of that penalty of around 2 crores odd. And that's why from around the 670 odd, it's bounced close to around 2.5% or thereabouts. But we'll get you the latest on that front. For the time being, though, let's focus on another stock of the day. Federal Bank, they came out with a set of numbers. Abhishek immediately told us that those numbers look pretty good. He joins in to run us through a quick analysis on that set. Abhishek?
Well, Nigel, records galore at Federal Bank in terms of, quarterly highs. So return ratios, that is ROA and ROE, are the best in last 26 quarters, with ROA at 1.2% and ROE at north of 14.4%. The loan growth on a YOY basis is at 15-quarter high, and on a sequential basis is at 20-quarter high. So it has come in at 6.3% on a sequential basis. Annualized slippage ratio is less than 1%, which is perhaps the best in last 7 quarters. So the asset quality has been one of the best that you can see in last 20 quarters, with gross NPA ratio declining to 2.46% versus around 2.7% in the previous quarter. The net interest margin is at 19-quarter high of 3.3% when compared to 3.22% in the previous quarter. Cost to income ratio or operating efficiency is one of the best in last 5 quarters, given the fact that it has declined to 48.9% when compared to more than 50% in the previous quarter. So both the NII and the PAT are beat to our poll.
Look at the recovery, Abhishek, thank you very much. That's Federal, of course, which is doing well. But look at the recovery on Max. It was down 10 and it's recovered 5%, almost a full 5% from the day's low very quickly. So 1 crore penalty on Max Life Insurance. And I think there's another 2 crore penalty, which is going to be paid by, Axis Bank in 21 days. That's a 2 crore penalty on Max Life, which has come through. So this is with regards to, I think, the bank assurance. Axis is a bank assurance partner for Max, and with regards to transfer of shares between Max and Axis, the charge seems to be that transfer of shares from Max to Axis happened not at a fair market price, but at lower price, and there were undue gains to Axis because of this. So that seems to be the basic kind of charge and the order from IRDAI, which we'll get to with Yash in greater detail. But let's stick with banks and financials. Hdfc Bank will be the other one which will be reporting earnings tomorrow. Abhishek, what should we expect?
Well, Prashant, YOY, the NII growth may be one of the best in last 8 quarters. We already have the business momentum which the bank has given in its preview numbers, wherein robust loan growth was seen on a YOY basis. It's the best in last 14 quarters. So deposits up 19% YOY and about 4.3% quarter-on-quarter. The CASA ratio has remained healthy at 45.4% when compared to 45.8% in the previous quarter. Loan growth was robust at 23.5% YOY YOY and more than 6% sequentially, which meant that the credit deposit ratio has actually increased to 88.4 when compared to 86.9% in the previous quarter. So what are the key things to watch is that the net interest margin may remain stable or increase on a sequential basis. Now, slippages of formation of bad loans as per CLSA estimate is around 5,500 crore in this quarter. This compares to 7,293 crore that they had in the previous quarter. CLSA expects core operating profit growth of 14% YOY and about 4% sequentially, while on the other hand, Kotak Securities estimates overall operating profit to grow at 13.5% YOY and about 16.7% quarter-on-quarter. Asset quality will remain stable or improve. Remember that in the previous quarter, gross NPA ratio was at 1.28%. So our polls suggest NII growth of 16.2% YOY and about 5.5% sequentially. We are working with a PAT growth of 18.8% YOY and about 14.1% sequentially. Back to you.
All right, Abhishek, thank you very much for that. I mean, that's a big number. Prakash is coming to you on both Federal and HDFC Bank. But Max, we have some more clarity. Yash is mic'd up. He's standing by and he's gone through the order. Yash, what is this about?
So, Prashant, as far as the order and the crux of the order is concerned, there are two charges which have been levied on the insurer, Max Life Insurance. And in both charges, the penalty levied by the insurance regulator is 1 crore each, which means a penalty of entire amount of 2 crore will have to be remitted by Axis Bank in this particular case, because Axis Bank happens to be the promoter of the company. Hence, that 2 crore amount will have to be submitted with the insurance regulator within 21 days. As far as the charges are concerned, the first charge essentially talks about making undue gains of substantial amounts by the way of transactions in shares of insurers, that is Max Life Insurance and Axis Bank. Of course, Axis Bank acquired about 29% stake in the company, and as far as that particular transaction is concerned, there has been some violation of IRDAI regulations, because of which the first part of the penalty, that is 1 crore, has been levied. The second part of the penalty is on account of Axis Bank being the corporate agent, which means a distributor of insurance products of Max Life Insurance. Some violations have come up to the regulator's notice there itself. There also a penalty of 1 crore has been issued. So a total penalty of 2 crore on Max Life Insurance.
Yash, apart from the financial penalty, is there anything else?
So importantly,
any other stricture, anything else? Yeah.
It is restricted to the penalty of 2 crore. There has been nothing that has been spoken about the transaction or any problems with the transaction that will come about because of this order. So no concerns for the transaction as per the order, just about that 2 crore penalty.
So just a financial penalty, no reversal, stricture, restrictions or anything of that sort. Yash, thanks very much for that. And I think that explains the big bounce that we've seen from the day's low. Prakash, any thoughts? I mean, Yash has gone through the order, just that penalty.
Oh, absolutely. So, when Rima asked me, that's exactly what I said. So if it's just a penalty of financial nature, I don't think there's anything to be so worried about that you could get the stock off 10%. If there were strictures in terms of the bank assurance model or, some sort of suspension, then probably, that was a little bit of a worrisome area. But I think the markets will be very clearly taking cognizance of the fact and digesting it in that way, that it's just 2 crores that goes out of the pocket of both these players, which doesn't warrant this kind of a fall. And hence the recovery that you see could probably even be sharper.
Okay, let's move on and talk about HDFC Bank. Prakash, the stock is going into its earnings very strong. It's up close to about 3.5%. Typically, HDFC Bank doesn't disappoint in terms of its earnings, but it's had a rough run a couple of months ago. Things are improving on the regulatory front and the IT front as well, but it's still a rank underperformer vis-a-vis, especially an ICICI Bank, but even as opposed to an Axis Bank. Amongst the private sector banks which someone can buy, how would HDFC Bank stack up?
No, and Rima, that's precisely the opportunity. It hasn't performed. And if numbers tomorrow kind of come back with that endorsement of the fact that it continues to deliver, very promising metrics, there is no reason for the stock to continue lagging behind the peers, let's say ICICI or Axis. And my sense is this whole merger, that the impending merger between the two entities is something which people haven't been able to till now accept in terms of the financial impact, which is right up to the last level. So it's got so many moving parts, and once the whole thing is kind of consolidated, you'll probably see a very strong entity emerge. And my bet is on HDFC Limited, which eventually will be the play going forward. I think they've had one of the best seasons of sorts, and they are at a secular growth trend, which is second to none in terms of the housing finance business. And the banks also kind of recovered, got all those negatives which you mentioned, the IT issues, the regulatory overhang, all of that's kind of out of the way. So there's no reason why it doesn't need to perform. It's just that the FIs haven't been coming back in with a vengeance, and then there has been easier low-hanging fruit in terms of the banking sector for them to pluck. So this will definitely do that. It's a great tactical buy. And if you were to buy it post the results also, I don't think it's going to be too late. So, but definitely I do expect that recovery, and the numbers will actually endorse that.
Okay, all right. Prakash noted that view. By the way, the Nifty was threatening to break that 17,200 odd mark, but the intraday chart should come up for you on the screen. And it's gone to that level and seen a bit of a bounce in the day's low. So at least for the time being, we have defended that 17,200 odd. Intraday, we have seen numerous, downticks, but those downticks are getting bought into. And the bulls would like to defend the 17,200 odd mark on a closing basis. For the time being, slip into a short break. You come back. We'll continue our focus on markets as well as on stocks, and we'll get a chat going with Harish Krishnan of Kotak AMC. Well, some stability in the index as we speak, 17,230. The bulls would like actually to pack up right now because, we're seeing some bit of profit taking in the last 60 minutes or so. From stocks that are moving around, from the frontline names, Bajaj Auto, remember that comes out with a set of numbers. Bajaj Auto has moved to the low point of the day, so keep an eye out on that one. ONGC continues to see some bit of selling. And SBI Life as well has suddenly moved to the low point of the day. So these are some of those frontline names that ain't doing too well. But Rima has been telling us about some of these large cap IT companies. Rima, you're tracking Tata Elxsi. They're going to be reporting their quarterly numbers, and you're going to be running us through expectations coming in from Morgan Stanley, I think. Rima, before you do that, tell us about that. This is one of those stocks, right? In the last 5 years, you talk about stocks doubling and tripling. This is up 900% in spite of it coming off from the top. What a big mover. Tell us the expectations.
Absolutely incredible. This stock has defied gravity. And even this year, when Nifty IT index itself is down 25-30%, this stock is up 45%. And people are buying the stock despite its valuations being at an absolute premium compared to the rest of the pack. Its valuations forward, that's FY24, stand at 65 times. So that's expensive. When the other IT companies are trading at 20, 25 times, and we're still saying it's expensive, Tata Elxsi is at 65 times. Well, one of the reasons is that its growth has been extra consistent. For the last 5 quarters, its year-on-year revenue growth has been at 30%. You can quibble, it's come down from 40% down to 30%, but growth rates have come off for the entire IT pack. But it's still 30%. And this quarter as well, Morgan Stanley is saying year-on-year revenue growth, according to their estimate, will be 30%. Secondly, margins for Tata Elxsi are industry-leading. Margins have been hovering around that 30% band. It's significantly picked up pre-COVID, and it's largely sustained at those levels. This quarter, Morgan Stanley is again expecting margins should be around that 30% band. That's the revenue figure. We'll pull up the margins as well. Also remember, as I said, margins for Tata Elxsi are at industry-leading levels. So when Tata Elxsi's margins are estimated to be at 30%, we need to compare it with the rest. And for the rest, as you can see, margins are actually in mid-teens. So Tata Elxsi's margins are double. What does this company do? It's a very niche ER&D company. So you will not compare it directly to, say, a services company like Infosys, but 40% of its revenues, for instance, comes in from the automotive pack. Now, in the automotive pack, you would have your infotainment system, right? The one which connects your Bluetooth, etc. And more cars are getting, have a greater percentage of software. Now, Tata Elxsi caters to that. It provides the software in the automotive segment, like KPIT Tech. But unlike KPIT Tech, which gets 100% of its revenues from the automotive pack, Tata Elxsi is fairly diversified. 40% roughly comes in from automotive, but they also have exposure to media at 40% and medical devices at close to about 20%. And all these sectors are getting increasingly software, seeing a greater percentage of software in their business. And the other factor is its delivery model is in a very sweet spot. Most of its employees sit in India, so its offshore percentage is far higher than the rest of the IT companies, which explains the high margins that Tata Elxsi enjoys. So let's see whether this consistent performer in the IT pack delivers on expectations, but it's expected to be a good quarter, as it's always been for the last many. But let's talk more about IT. You chatted with Kenneth Andrade yesterday.
I mean, he owns, I think, a couple of IT companies, but his view is that the sector is getting into very attractive levels very fast. So actually listen in to that small soundbite, Kenneth, on IT services.
Valuations are the best that are much better than they've ever looked before. If you go back to that database of IT companies out there, you'll get someone who's available at a 10% cash flow yield. You'll get companies available at a 5% dividend yield. So yes, value in that segment at a 52-week low in a number of those names is emerging, and it's emerging
rapidly to complete that. Prakash is still with us. Prakash, any thoughts on Tata Elxsi or the broader IT space and what we're seeing? The move this week is continued. From last week, the IT services index was up to 3.5. This week, if we close like this, it'll be another 2%.
So, Prashant, let me first answer the broader IT issue. I think IT was battered so badly in terms of ownership levels and P multiples that the TCS number kind of gave you a feeling that it was kind of overdone, at least in the medium term. So at every fall in IT, I think there will be a set of believers who will come in. But my sense is, that this particular calendar year has never been such a big issue because of the continuity of contracts. It's only going to be issues, how new contracts pan out starting January. So that's going to be the critical level of sorts or time zone of sorts that you would need to watch out. And that could probably also signify some sort of a bottoming out. But what's interesting is that you have plays like Tata Elxsi, which wrap up all the salience of the businesses, whether, so it's like buying into Tata Elxsi is like buying the best of a KPIT, a Coforge, a Birlasoft, a Mindtree, whatever the good stuff that these companies do, Tata Elxsi always had it housed in. And that re-rating is something which people can't have enough of, right? So that's the reason. But it's too expensive, according to me. This is a stock that you buy when things are down and out, and there's blood on the street. You'll probably get it at softer valuation without the business getting impacted. So that's my call on Tata Elxsi. Of course, we've kind of made money for clients, got out of it also, but the re-entry is a little bit of a tricky thing at this point in time, given the high valuations. And the rest of the IT pack, you'll probably start seeing some sort of a bottom out closer to December, given how new contracts pan out in January, as I said earlier.
Prakash, thank you very much for joining in, and have a splendid weekend. We look forward to connecting next week. Let's also invite on Closing Bell today Harish Krishnan, the Executive Vice President and Senior Fund Manager, Equities at Kotak AMC, on the show now. The markets, by the way, have slipped again, so we're back at that 17,200 mark. Harish, afternoon, and thanks so much for joining in. How do you feel about the markets right now? It's been very tough to call. What's your prediction?
So I guess predicting near term is anybody's guess, and we are no good at it. What we have is a view over the medium term. And over the medium term, we do acknowledge the fact that India and Indian equities, from a domestic perspective, is doing exceedingly well. Various indicators do point to a sustenance of growth momentum. The worries are primarily coming from the external front, given both the macro developments globally as well as the geopolitical developments that have happened over the course of the last 12 months. That also brings with it some advantages in the competitiveness of Indian companies, and that is where we think there can be some positivity that can come through over the medium term. Having said that, I think valuations are where the bigger question mark is all coming about. A lot of these good things that I have spoken about are how much of it is already captured in the price And today, when we look at valuations across the world, almost every other global market is below its 25-year median valuation, whereas we are sitting at the top or close to the top of our 25-year range. And while a lot of it is justified given our inherent strengths, as well as the fact that we have a reasonably long runway of growth, I guess in the context of where every other country's valuations are, I think that pretty much caps a meaningful upside in the near term. And therefore, what we do advise our investors is to A, increase the horizon of investing into equities, and B, clearly have an asset allocation goal plan. So from the asset allocation point of view, we run a couple of strategies. One of them is Kotak Balance Advantage Fund, which moves its net equity from 20% to 80%. And currently we are bang in the middle at close to about 50%. So that should give you a sense as to what our broader thinking as far as the equity markets is concerned.
Okay, 50% towards equity right now, Harish.
That's right. 50% is into net equities.
Net equities, got it. By the way, the market's taking a leg lower once again. We are up just 160 points. I mean, the sharpness of some of these moves is quite... Nigel was just earlier pointing out how the market was up about 220, 230. It's given up 60 points just like that in the last couple of minutes or so of trade, last 7, 8 minutes of trade. And we are at 17,172, which I think is at the day's lowest point. So just under 1% left now. You know, Max was something we were pointing out. We put out, we did a discussion on insurance earlier this morning. Let's just pull up that valuation graphic. This is it. You look at that. Max, it does, has been, LIC, of course, is the cheapest, but the largest and the cheapest. It's got its own problems. But amongst the earlier, older listed players, Max Life, by far the cheapest. Mind you, earnings in this particular quarter in terms of annualized premium growth or value of new business, margins, VNB margins will be tepid, but how much of it is already in the price is something you want to. And that is the reason why many like Max. It offers some valuation comfort, but of course growth has also been lagging and that shows up. Harish, any thoughts? Insurance, I don't know if you saw this news on Max, it was down 10%, it's recovered sharply. Any thoughts at all?
So we are positive on the overall insurance space, both on the life and general insurance. I think the runway for growth continues to remain quite long. The penetration levels, etc., are well flagged. More than anything else, I think from at least what we've seen in terms of financial services, the top 4-5 companies in various financial services have tended to increase their market share and competitive positioning quite significantly, with a tail of players actually vacating and exiting. And therefore, there is a consolidation happening within the sector. Over the medium term, this typically tends to lead to better pricing power. So yes, you're right that over the course of the last year and a half, the valuations have cooled off. Almost all of them have underperformed the broader markets, given the fact that they had performed so well in the prior period, especially pre-COVID. And I guess given the current bout of underperformance, we would think that this therefore is an attractive zone for us to back many of these life insurance and general insurance players.
Okay, hi Harish, been a while since we chatted. Good to speak to you. Well, Harish, I wanted to ask you about the technology space. I think you're reasonably underweight even out there. There are obviously a couple of global factors at play, and things are looking a little iffy. So I get that rationale. But what if the stocks correct, say, they've already underperformed, some of those tech-related names, say they correct another 10 to around 15%. Would that get you interested then?
Yes, Nigel. So I think to put it in context, you're right, we are underweight. We were significantly more underweight as we started this year, and we have actually reduced some of our underweight into the space. There are two major worries that people flag out when they come to discuss on the IT services space. The first is clearly that globally there is a recession, and therefore revenues of the clients will be under pressure, and that may flow through in terms of the revenue lines and the revenue growth of the Indian IT services. Which is a cyclical factor, clearly. Obviously, we still have to see the recession or the slowdown which may happen over the course of the next 12 to 15 months. The second worry that people had was that margins were already lower compared to pre-COVID, despite a whole bunch of benefits of, say, travel costs being significantly lower, etc. And therefore, our margins structurally headed down. I think where we are as far as both of these worry points are concerned, I think on the margins, we are a lot more comfortable with the way the Indian IT services operates. Yes, they have hired a lot of people. So we did this analysis that roughly if revenues of the Indian IT services has gone up close to about 20% from, or 25% from CY22 over CY19 on an aggregate, offshoring mix has meant that actual revenues, because offshoring tends to deflate revenues, the actual revenues would have gone up by about 30% on a like-to-like basis. Compared to that, obviously hiring has gone up by close to about 40 to 50%. So they are definitely hired up significantly in anticipation of faster growth. And so if the growth were to slow down, there is going to be some issue as far as margins are concerned. But these are things that the Indian IT services companies can very quickly correct. And we have already seen some evidence in this quarter prints as to how margins have started bottoming out and surprising investors. So on the margin front, we are less worried. On the revenue front, clearly, we still have to see how deep the recession is. Currently, our base cases, it's going to be a shallow recession as far as US is concerned. But, the jury is still out. And as and when that risk gets played out, which, as you said, could be under 10-15% valuations being more comfortable, I guess some of the underweight that we still are sitting on can potentially get covered.
So you're more worried about the future demand rather than, on the margins contracting from here on. At least this quarter, 3 out of the 4 large IT companies showed a margin improvement, which was far ahead of street expectations. So there was significant margin expansion that we saw. Harish, thank you very much for joining in. That's the view coming in from Harish Krishnan. He's positive on the domestic demand, but he is worried about the external vulnerabilities, the uncertainty which is rising, and India's relative valuation is at a premium, and that could cap our upside. But let's get you some more opinion as we get into this break. Kenneth Andrade also remains bullish on commodities, especially on the agri space. Hear out his views.
One of the very few times since India's independence, virtually all crop prices are trading higher than MSPs. Okay, this is the first time that we've seen in history that you've got a large industrialization of agriculture. When I say industrialization, agriculture moving into industrial products, right? You've seen it through the ethanol policy. You will see it getting converted into plastic or single-use plastic over the course of the next year, 2 years, or 3 years. So you've got a new use or new demand pattern emerging for agriculture, and that's kept that along with relatively weak or not favorable monsoons has kept supply reasonably tight.
Welcome back. The mid-cap index is now in the red. That's the extent of profit booking that we've seen. From the day's high, the mid-cap index has slipped 1.7%. For the week, it's likely to go home with a cut of close to about 3%. And the advanced decline ratio is right now pretty balanced. There are equal number of stocks currently in the green compared to in the red. But as you can see, the gap between the two lines has now diminished completely. Let's get to our favorite segment, D Street Chatter. Nimesh gets us into an insight into dealing rooms and what they're saying. Nimesh.
Hi, Rima. It looks like the market has failed to sustain the gap of opening what we saw in the morning, and the mid-cap index is in the red. Even the broad, the indices have sharply come off from days high. And that was the feedback as well. This rally is not backed by big buying. So even today, the flows are mixed is what I understand. And what we saw in the first half was purely short covering rally in some sectors like financials and technology. So that led in the first half. I guess now that the big macro events are out of the way, at least in the short term, the focus will be back on the earnings. We saw how some of the IT stocks reacted to strong earnings, so that's going to be the big theme going into next week as well. We have on Saturday the Hdfc Bank numbers, and that will set the tone for the banking index on Monday. So that's something to watch out for. From a technical point of view, I've been saying this for a while now that Nifty is stuck in a range between 16,900 on the downside and 17,300 on the upside. Any meaningful upside will be only after Nifty decisively crosses 17,400. So that's the level to watch on the upside. But clearly, from today's point of view, the gap has got sold into, and what we saw in the first half was purely a short covering rally in financials and technology names.
All right, Nimish, in terms of specific stocks, what are you picking up?
Well, Prashant, so in terms of individual names, the first stock is RITES. That stock is buzzing in trade. In fact, in the last 2 days, the stock is up over 10%. This month, the stock is up almost 22%. And for the last couple of days, there has been very strong volumes and the feedback is maybe some genuine large FI investors are looking to buy into this stock. So hence, a big up move in that particular stock. So that's the first one. The second stock is Adani Enterprise. Ever since the stock got added to the index, it's been consolidating in that very narrow range of 300 points. Yesterday, interestingly, some large investors met the management for the presentation of Adani Airports. That's again within Adani Enterprise. So there was a lot of feedback on what next for Adani Airports going forward. So that's the reason why Adani Enterprise is in focus. And the third stock is Ganesha Ecosphere. Again, a small stock, little thinly traded, so not much in terms of volumes as well. But even that stock in this week itself is up 10% and a bit of momentum is back in that stock, largely because today and tomorrow, which is, there is going to be a investor meet and the analyst meet for the new plant. And that plant, once on commission, is expected to double the capacity and the revenues as well. So that's the reason why Ganesha Ecosphere has been buzzing and is in focus in this week, up 10%.
Okay, thank you very much for that. So watch out for all these stocks. Let's invite Mitesh Thakkar once again on the show. He's going to tell us what you can buy today and sell on Monday or take a reverse trade. Mitesh, what do you have for us?
So one BTST on Federal Bank with a stop at 129 for targets of 133. And one STBT, and that's on Motherson Sumi with a stop at 70.10 for targets of 68.
Okay, all right, Mitesh, got that. Well, a couple of companies are set to report their Q2 numbers, later today. Sonia is standing by to run us through what we can expect from Bajaj Auto. Sonia?
Well, thanks a lot for that. Now, the Bajaj Auto stock has fallen 13% from the highs in August on account of weakness in the export markets. However, for Q2, the expectation is that things will recover both on a quarter-on-quarter as well as on a year-on-year front for the margins. Let's take you through the overall numbers. A revenue growth of 17% is what we're looking at on a year-on-year basis, in excess of 10,100 odd crores. The volumes have in fact picked up quite a bit on a sequential basis. So there's a good sequential recovery in volumes, up over 23% quarter-on-quarter. The EBITDA will go up by 42%, while the margins year-on-year are also expected to improve to 17.7%. A couple of things to watch out for. The domestic demand is showing a sign of recovery. Exports continue to be under pressure, so any indication of a recovery in the export market will be crucial for the stock. The EBITDA margins are expected to improve 150 basis points quarter-on-quarter. We need to understand whether the raw material drop benefits will be seen Q3 onwards as well. And the semiconductor shortages have eased, benefiting a production of premium motorcycles. So all in all, good set of numbers expected.
Okay, good set of numbers from Bajaj Auto is what Sonia is expecting, but I'm tracking Shree Cement's numbers, and those numbers are not expected to be very great. The stock, though, has factored in some part of the bad news. Remember, the stock valuation-wise, well, it trades at a premium in comparison to its cement peers. And if you look at it year-to-date as well, then the stock has underperformed big time in comparison to the Nifty. As of now, it's not part of the Nifty, though. What are we expecting? Top-line growth of close to around 23% approximately. The operating profit will contract by more than 30%, though. That means that margins will come in at multi-quarter low of around 15%. Profit number as well does decline by close to around 60%. Factors at play. Top-line growth, I said 22%. Bulk of that will be on volume, 17% growth on the volume parameter. the realizations will contribute the remainder of that. So close to around 5% higher on a year-on-year basis. So on a sequential basis, it's down between nearly around 3 to around 4%, because in North India on a sequential basis, pricing was particularly weak. The reasoning that the margins were under pressure is because the sharp increase in input costs, they'll be sitting on some high-cost pet coke inventory as well. So that hopefully gets exhausted. And pricing on a sequential basis has been weak. What helps them a little bit is that operating leverage will play out, because obviously they sold more. Besides the numbers, it's already expected to be a weak quarter. But the management commentary and how will things improve from here on is something that the street will look forward to. And any plans on inorganic growth as well is something that the street will really be looking to latch on to. Well, that's about Shree Cement as well as Bajaj Auto. We have Mayuresh Joshi, Head Equity Researcher at William O'Neill, who joins us as well. Hi, Mayuresh. All set for the weekend, but it's going to be a busy one with a couple of these numbers coming in. And I think, Mayuresh, we are almost matching as well. But Mayuresh, what about Shree Cement? As I just said, the numbers are expected to be weak. How do you approach Shree Cement, or do you prefer some other cement names?
Afternoon, Nigel. No, clearly, as you have rightly pointed out, I think if you probably look at the numbers on a sequential basis, I think the pain that will come through for a lot of these commodity consumers, specifically cement companies with higher pet coke prices, logistics costs still remaining elevated. And therefore, I think even if volumes probably remain flattish on a quarter-on-quarter basis, elevated input costs are going to take a hit in terms of the reported EBITDA and the reported EBITDA per ton as well. Obviously, I think things will see significant improvement from Q3 onwards as they restock input materials at a much lower cost. And it's all about how demand probably comes back. Domestic demand, Nigel, surprisingly held out pretty well. So the kind of capex that the government is doing in terms of housing, in terms of infrastructure, I think that will keep volume growth for the industry afloat for the better part of the second half, as well as the next year, as next financial year as well. But generally, I think weak numbers are expected from Shree Cement. So I think the leaders within the pack who have probably assumed leadership position, stocks like ACC, Bajaj to a certain extent, I think the momentum there can continue as per the O'Neill methodology.
Nigel and Mayuresh, tell me you guys did not talk to each other. I'm sorry, I can't.
Are you feeling left out?
I don't know why I am on air, but let's find Nigel on air along with Mayuresh in that window. All right, I think I'm going to wait.
No, we did not have a chat question.
I couldn't believe my eyes when I saw Mayuresh. I was like...
So now the color is looking a little different, Nigel. It's not completely,
Yeah.
But the size of the squares is exactly the same. I almost get a feeling you're feeling a bit left out. Like they didn't invite you to this.
Rima has a clothes matching app. I think she took it out.
It's the trained eye of a girl.
No,
I'm surprised that you even caught the difference in the color.
I mean,
so you've got to give yourself credit.
And then I looked up. I said, "Oh, wow, this is quite something." Mayuresh, on a serious note, I mean, this tech move that we've had, right, 2 weeks in a row. Do you think it has more legs to run, or it'll fizzle out, fade? Already. What's your sense?
So largely, I think as we have been tracking a lot of product companies in the US market, our parent probably does that. And what we're seeing in terms of numbers for the Indian companies as well, I think it's largely a range-bound move between the 50 DMA and the 200 DMA. I think that will continue over the next couple of quarters, to say the least. The reasons, obviously, I think are pretty well known. I think what probably happens in terms of client budgets we'll come to know probably in Q4, which is Q4 of our season, Q1, in terms of how the US companies report. And largely in terms of the margin compression that we still see, margin improvement was very, very stark for companies like Infosys and HCL Tech in the quarter gone by. But I think some inherent concerns still remain. I think it's a very simple way of analyzing this, Prashant. I think Wipro has been a stark underperformer. HCL Tech, Infosys probably have been outperformers out of the large cap so far, and TCS has been more or less in line with estimates. The day I think Wipro's commentary starts improving, and we've seen this in the past as well over the past few years, I think that is the time I think the IT sector normally bottoms out. When Wipro starts giving commentaries which is very, very sluggish, I think the other companies probably repeat that in the next 2 to 3 quarters. So I think the IT sector still has some time to bottom out.
Okay, we need to slip into a very short break. But by the way, just look at the cut that we're seeing on India Cements this week. Today, it's down close to about 3%, but this week it's down 16.5%. And Adani Wilmar, too, has seen a big slide in the last 10 minutes. It's now down 4% for the week. It's lost close to about 12%. Adani Wilmar, remember, gave a pretty muted outlook for the current quarter, and that's put pressure on the stock for the week. But today as well, in the last 10 minutes, it's seen a bit of a slide. Get into a break. We'll come back with the market closing for the day and the week.
Okay, welcome back. There's 3 minutes to go for the market closing. Mayuresh, thank you very much for being with us here today and running us and our viewers through your views, and have a good weekend. We'll see you back next week. Well, the market is going to end up 181 points. I mean, it'll end strong, but it was way stronger when we started with that 300 plus point move. But I mean, 1% is absolutely nothing to scoff at, and the market will have 1% today. Big red candle though, I mean, from the opening levels, of course, because the market came off sharply. And we are ending, under 17,262, as we've been highlighting. I mean, you can look at 17,300, some have been watching that. So, I mean, technically, this is not a weak close, but given the kind of open and the sort of bit of fizzle out that we've seen, perhaps leaves a little to be desired. All right, so stocks and sectors, banks did well, 2% on the Nifty Bank. IT did well, and the Farmers Index did very well. These are the top three performing areas. Infosys and HCL Tech outperformed. I mean, Infosys, of course, for the second day running. Infosys after yesterday's results. HDFC Bank into the results, HDFC Limited, and there were names like UPL, ICICI Bank, and L&T, which were some of the top performing stocks, Nifty stocks today. Rima.
The mid-cap index is opened with a gain of more than 1.5%, but it's finally ending absolutely flat. The last tick is perhaps in the red. The advanced decline ratio churns in favor of the losing side. So 1,500 stocks in the red. Talking about the big losers, hotel stocks sold off. Lemon Tree Hotels down 3-odd%. Indian Hotels was down 2.5% for the week. These stocks were down close to about 10-odd%. Remember, they were hovering close to their 52-week highs just last week, and today you've seen profit booking coming through in them. Z Entertainment was another loser. It's down close to about 2-odd%. Adani Wilmar, India Cements sees big losses, not just for the day, but for the week as well. And Nalco was under pressure. On the gaining side, a couple of earnings reactions. So Anand Rathi, Angel One stocks end with gains of close to about 3-odd%. Mindtree fell sharply from the day's high. At one point of time was absolutely flat, but by the end of it, notching some gains. The earnings picture looked very good for Mindtree. A couple of the other big movers include Apollo Micro, Pennar Industries, small companies, but running hard for the second day in a row, and Federal Bank. That's got to be the stock, perhaps in the mid-cap end for the day, up 4.5% on the back of very strong numbers, Nigel.
That's right. Towards the end of trade, a couple of names from the broader markets caught your attention. Shimaru, the intraday chart should come up for you. Big up move is what we saw on that one. You had TVS Electric as well. Well, a big up move is what we saw on that one as well. And Ami Organics, the stock was trading in the red actually till the final 10 minutes of trade. Suddenly we saw a sharp spike up on that one. And Apollo Microsystems, that was the one that got some fresh money, or that was the announcement at least that was announced. Small cap company. But that one towards the end of today's trading session as well did go skyrocket. For the week itself, it was up a good 25%. Well, on that note, we'll have to wrap up on this edition of Closing Bell. Wishing you guys, a good evening as well as a good weekend ahead. But as we wrap up on this edition, well, you don't go anywhere, because when we come back, Smart Money, our special series, is waiting for you. Sonia's lined up on the other side.
Powered by LIC, हर पल आपके साथ.
This festival, bring in Nissan Magnite. Big on dreams,